Recording is
महाराज छुट्टी लेके आया यार।
क्या कर रही हो?
वही तो बोल रही हूँ, और जाने वाली कल परसों।
Yeah, good morning, everyone. So yesterday, US market saw some profit booking or hitting all-time high. After that, some profit booking has come. Marginally down. Futures are also flattish. Asian markets are seeing a bit higher profit booking, and most of the market in Asia are down. We are seeing even dollar index also, which came down substantially in last few days, has bounced back and is up by almost around 50 basis points from yesterday same time. So some sign of cooling off of the recent run in the international market, wherein marginal profit booking has come. So, and India, yesterday evening, we saw a sharp move up in last half an hour. So, quite possible that that also can cool off in the today morning. So, today expect market to cool off a bit and remain in the range bound thereafter. Now, I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. So yesterday, sharp bounce back in seeing last 1.5 hour. We expect this momentum to be continued, but today closely watch first half. If Nifty, spot Nifty break the 22,470 level, then we expect above momentum towards 22,540 and 22,600. The majorly resistance zone is Nifty is for 22,400 to 22,470. Right now, Nifty trading between this range. So we closely watch first half an hour. If Nifty trade above 22,417 spot Nifty, then we expect further upside move. Downside, first immediate support place around Nifty 22 370 first and 40. Below that, again Nifty comes towards 22 200 and 150 at downside. Bank Nifty also facing an immediate resistance around 40 at 500 in future. And if my bank nifty break this level 48 200 and 500, then we expect further up more. Otherwise again bank nifty struggle this range. Downside first support place around 47 300 and 47 4 to 200 in downside. Below, if Bank Nifty break the 47,400 again and close below that, then downside open towards 46,670. So both index again trading near the resistance zone. To be closely watched this week Friday closing. I managed to sustain above this range, then we expect further rally. Otherwise, we see the resistance and then Nifty again trading between the range. Fin Nifty also facing the resistance and upside 21,570 is a major resistance for Fin Nifty. And first immediate support place around 21,370. So all three index trading near the resistance zone. Stock specific, Balkrishna Industry looks positive. We already given call in Balkrishna Industry, and last two to three trading session given a positive momentum, and we expect this momentum continue towards 26 440 and 2617 upside. Downside 25 550 is the first immediate support for Balkrishna Industry. Negative side, Bandhan Bank looks weak. Yesterday we saw that last second half sharp fall in Bandhan Bank, and GK Cement also looks weak currently. Maruti also showing overbought zone to expect some property booking in upper range last few trading session. And yesterday we saw the pressure in all Maruti stock, and downside 12,300 first support. Below that, we see the some pressure increase in Maruti towards 12,000 and 11,700 at downside. That's it for technical derivative guidance.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have seen that in yesterday trading session, almost a major selling has been witnessed. But in the closing, we have seen that the pullback was very sharp. But after a pullback, also we are seeing that the Nifty failed to manage above the resistance zone. Nifty is continuously facing the resistance of 22,500 to 550 range on the upside level, where we are seeing that the Colorado positions are also getting added up at a near strike on the monthly basis. While on the weekly basis, in yesterday weekly expiry, we have seen that the major Colorado position got exited in the closing hour due to the pullback which came in the Nifty, but that is not a confirmation for the market because still we are seeing that the India VIX is trading at 20 level, and the next round of 14 phase is also likely to come in next over 2 to 3 days of trading session, while also the election result will be out in next 3 to 4 weeks of trading session, due to which we might witness the India VIX to stretch between the range of 22 to 28. And once if India weeks need to go between the range of 22 to 28, we will see sharp dip in the market in daily basis, due to which the India VIX move will be very higher, due to which we might see some volatility trading range in the market. But once if Nifty manages to get a stable or 20 to 550 level, then only we might see some fresh buying or stable buying in the market. Till the time it's not going above 20 to 550 level, till that point of time we might not see any differentiation on the open interest front, because as per the OI position, it is completely range bound front, and the position on both side has been added up sharply. While on the stock specific front, counter that looks positive in today's session will be Balkrishna Industries, M&M and HL looks positive, while on the negative front, Can Bank, PI Industry and Bandhan Bank looks negative in today's trading session. So that's it from derivative front. Thank you.
Good morning. On the result side, Sanghi Movers result has declined. There was a dip in utilization levels and increase in OPEX, which impacted profitability in Q4. Revenue was flattish at 165 crores and up 30% year on year. EBITDA declined by 20% on sequential basis, but was up 20% year on year. The margin came at 55% against 68% in December quarter and 60% last year. Main reason for dip in margin was the increase in OPEX on the back of increase in managerial remuneration. Instead of 1.5%, the management has increased their payout as percent of profit to around 3.5%. And also there was increase in mix of EPC business in the revenue, which led to some larger operating expenses. Although result was weak, strong industry tailwind and cheap valuation should support the stock in case of any steep decline. So we are neutral on Sanghi Movers. Kaynes Technology India, one of the few EMS companies where results have consistently improved, unlike many other EMS companies which have not delivered on their growth guidance. Result was ahead of expectation. Revenue growth was 25% sequentially, 75% year on year. EBITDA came at 95 crores and was 5% ahead of estimates, with margin of 15% in line with expectation and similar to past trends. Profit came at 81 crores against expectation of 64 crores and versus last year's 41 crores. Although stock is expensive, it will still outperform as market starts factoring in growth for next 2 to 3 years. Endurance Technologies result is ahead of expectation. Revenue growth was 20% year on year. EBITDA came 20% ahead of estimates as margin expanded to 14.5% versus expectation of 12.3%, and previous range since last many quarters has been in between 12 to 13%. So margin has expanded nicely. Profit came at 210 crores versus expectation of 160 crores, and growth was 54% on year basis. So we are positive on Endurance Technologies. Thank you.
Good morning. Yesterday, Crompton Greaves Consumer Electricals posted the results marginally above expectations. Revenue grew by 9.5% on a YY basis, which was largely led by electric consumer durable segment, which was up by 14.3% on a YY basis. In this segment, fans saw strong double-digit growth, and premium fans contributed 24% versus 21.3% on a YY basis. It has taken 3 price hikes across categories in fans, and a lighting segment grew flat, while butterfly products witnessed degrowth of 12.2% on a YY basis. In butterfly products, currently the management is focusing on strengthening its senior team and its go-to-market channel, and it expects turnaround in next 2 to 3 quarters with double-digit EBITDA margin over the medium term. EBITDA margin reported at 10.4% in versus 11.8% in the last year same quarter. EBITDA margin contracted due to the impact of EPR liability and higher ad spends. The company has guided for the capex of rupees 90 crore for FY25, and if we look at the stock has rallied by 27% over the last 2 months and currently trading at a PE of 31 times to FY26 EPS. While we are structurally positive on the stock for the long term, while any correction in the stock price can be considered to invest in the stock. Solar Industries Limited result was below expectations. Revenue degrew by 16.5% on a YY basis. As highlighted in the press release, the company has lost rupees 300 crore of revenue due to losses from currency fluctuations and hyperinflationary conditions, and lost the EBITDA worth rupees 40 crore. For the same reason, on the annual basis, it has lost the revenue of rupees 900 crore and EBITDA of rupees 150 crore. The domestic explosive volume in this quarter grew by 20%, 20 to 24% range, and this was largely on account of mining and infrastructure sector. The order book for domestic explosives stands at rupees 2,500 crore. In addition to this, it has observed increased sales in defense sector, where it has crossed rupees 500 crore of revenue milestone for the first time. And here also it has an order book of rupees 2,600 crore. Further, it is expecting big orders in the coming quarters, where the management has guided for threefold growth in defense revenue in FY25. The planned capex of rupees 800 crore in FY25. EBITDA margin is reported at 22% versus expectation of 23.9%. The stock is trading at a PE of 52 times to FY26 EPS, and we will provide the outlook post today's con call. DCW Limited result has improved. Revenue grew by 5.7% on a YY basis. There was a volume growth in synthetic rutile and pickup in exports. It has seen the prices have corrected for caustic soda lye, synthetic rutile, and soda ash with a slower pace. While PVC and synthetic iron oxide prices were remained firm during the quarter. EBITDA margin reported at 10.2% versus 16.9% in the same quarter last year. This was due to pricing pressure across product segments. The stock is trading at a PE of 91.5 times to TTM EPS. We'll provide the outlook post today's con call. Thank you.
Yeah, good morning. On the results front, Vodafone Idea reported its numbers in the evening, and they were in line with the expectations. While the customer base saw a decline of 6% to 21.3 crores, the ARPU, that is average revenue per user, came in at rupees 146. On a sequential basis, it was flattish. Last quarter, this number was rupees 145, and a year ago, it was 135 rupees. Revenues and margins both were flattish on a quarter-on-quarter basis, and loss for the quarter stood at rupees 7,600 odd crores. Secondly, eClerx also reported its numbers in the evening. They were marginally below expectations. While the dollar revenue on a constant currency basis rose 1.4% sequentially at $92 million, and it was in line with the expectations. But margins remained under pressure. They fell almost 240 beeps sequentially at 25.5%. The outlook remains positive with a long-term perspective, wherein the stock is available at 21 times 1 year forward earnings. The board has approved a buyback of the shares for a total size of rupees 385 crores at a price of 2,800 per share. That would be a 16.5% premium to yesterday's closing. That's all from me. Thank you.
Hi all, good morning. Mahindra & Mahindra result is above expectations. Revenue from operations grew by 11.2% YOY. EBITDA grew by 23.2% YOY and 6.5% QOQ. Overall PAT is above estimates. Company has announced that it will be investing 37,000 crores for the next 2 financial years. Out of the outlay of FY25 to 27, nearby 27,000 crores will be spent on product development, capacity creation, and technological advancement in the automotive section. Nearby 52% of the outlay will be spent on ICEVs and SUVs. Company will invest 12,000 crore in EV unit over the period of 3 years up to March 31st, 2027. Farm business will spend about 5,000 crore of capex, and financial services unit will spend 5,000 crore of capex. Company plans to launch 13 new SUVs by 2030, and company expect to remain the fastest growing PV OEM in FY25. Apart from rolling out new products, new products and developing new technologies, the investment will also be used for capacity creation. So the overall outlook is positive. Thank you.
Yeah, apart from this, Prince Pipe and Fitting has announced the result. They are in PVC pipe and CPVC pipe. The other two company which came up with the numbers were Supreme Industry and Finolex Pipe. Both have reported very good number, but Prince Pipe number were below expectations. In fact, they are underperforming their competitors and losing market shares consistently. This quarter, though, company has shown some resilient on the revenue front and grew 19% quarter on quarter, whereas the other two player has grown around 22-23% quarter on quarter. But the impact on the margins were still high, and Company EBITDA margin came in at 12.5% versus expectation of 13.5%, and quarter on quarter 12.2%. So, though revenue growth company is pushing now and trying to catch up, but still impact on the margin continue. So overall result seems a bit declining, below expectations, and we need to see when they start growing in line with the industry and uh, perform in line with the competitor, then only the stock can outperform. For time being, outlook is neutral for them. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. In today's session, gold, if prices are sustaining above 72,800 to 750, then one can initiate a buy with a strict stop loss of 72,600. On upside again, 73,100 to 200 is the level where one should take profits. Fresh buying only above 73,300. So for trading purpose, one can also sell around 73,200 with a stop loss of 73,350. Again on downside, 72,800 to 750 is the area where I should take profits. Silver momentum is strong and should be positive as long as it is holding 86,800. So as long as it is holding on the price, so one can initiate a buy for the target of 87,700 to 88,000. In copper, prices are likely to witness profit taking. Selling around 897 900 zone with a stop loss of 905. On downside, it can test 885 on the lower end. Similarly, zinc, it should be trading in a range bound movement from 264 to 260. Selling around 263 with a strict stop loss of 265 is recommended. And also on downside, around 261 can initiate a buy with a stop loss of 258. Crude oil yesterday witnessed recoveries from 65, 50, 60 odd levels. So buying around 6570 is recommended with a stop loss of 6500. On upside, it can test 6700. So if 6700 is taken down, then we are expecting further rise in prices. So may lead to 6800 to 6850. And in natural gas, one should buy around 205 levels and maintain a stop loss of 197. On upside, we are expecting 215. So that's it from us. Thank you very much.